Good morning, degenerates, and welcome to another episode of Boring Crypto IO, the place where I read you the boring crypto news every morning, Monday through Friday, just so you don't have to. My name is Not Important, and I'm your host, LFG. Vitalik Buterin warns against overloading Ethereum consensus layer. Biden won't accept debt deal protecting crypto traders. Not surprised. Ripple versus SEC. Could newly released documents tip the balance? I'm assuming we're talking about the Hinman document still. I don't know if there's any new news that has come out about that, but we're going to find out when we read the story, hopefully. With that being said, let's go to the market real quick. Before we do that, let's just have a little chit chat. This is our 100th video. Wow, pretty crazy. I did not expect... I mean, I don't know what I expected when I started this channel, being entirely honest, but I reflecting on the fact that this will be the 100th video I have done, it's a trip. It doesn't feel like I've done 100 videos, but obviously I have. If you do watch this and you're not some bot, I appreciate you. Continue watching, please, if you enjoy this content. Again, I don't do anything super crazy in this channel. I just more so, like I say in my opening, I'm just here to help you get the news, so you don't have to go search for it or read it yourself, etc., etc. Just here to help out, and just bring, I guess, more attention to the crypto space. But 100. With that being said, let's go to the market, guys. Market cap 1.122 trillion. Bitcoin dominant sitting at 46.3%. Ethereum is 19.4%. And Gwei has calmed down. 35 Gwei will get you an ETH transaction. Right now, guys, it's looking like a red day. There are some greens here and there. Bitcoin was very lackluster over the weekend, which we'll talk about here in just a second. Nothing crazy going on. 2% for Cardano. Tron up 7.26. 10.41 on the week. Yeah, not a lot going on, guys. We are definitely being lulled to sleep right now in the general crypto market. I know there are some things in some niche areas that are moving, but for general crypto, it is boring right now. Bitcoin on the 4-hour. Let's look at the daily real quick, just to give you guys an idea of how boring this movement has been over the last 2 weeks. So after our last big pullback, we've literally had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So let's call it a week and a half, almost 2 weeks, a week and 3/4 of just sideways action, really. Going back to the 4-day, tighten it up. This is what it's looked like on the 4 hour, excuse me, on the 4 hour. And this is just boring sideways action, guys. So here's my sentiment. None of my levels have changed. I'm watching what I've been watching. Here's my sentiment. Guys, this doesn't look strong. Volume has gone out. I mean, this is kind of like a double top. But we're not setting any real new highs or real new lows. My honest opinion, this does look bearish. I don't know how long we're going to range here, but it is looking lackluster. It is technically a downtrend on the smaller time frames. I mean, if you look at all of this, this is what we're looking at. I'll give you guys just kind of a quick... This is really rough and stupid looking, but you'll get my point. Cutting out some of the big runs. It's more of like a descending channel is kind of what we're looking at, guys. Descending wedge. Something like that. But this is a downtrend is all I'm showing you. And the reality is unless we break up above this downward trend, I don't see us going higher for a while. Hoping we just range, but the point I'm getting at, and I keep saying that, and I keep digressing, but the point is I think we have more downward price action in the works. Where does that take us? Are we going to 25? Are we going to 24? I don't know. I just have the levels that I've been watching. 25 is key. People are saying 25.2 is key. Whatever. I'm looking at 25 as a psychological. 25.2 is way too, like, I don't know. You're $200. You're picking straws, I guess. But I'm looking at 25. If we lose 25, all bets are off. Things are changing. We could potentially go down to 24, 23, etc., etc. But again, like I said, right now with this momentum, this downward trend, to me it looks like we have a little bit more downside price action to go before we switch and go back up. Sorry guys, that's what I'm looking at, but I could be wrong. I hope I'm wrong. I'm a terrible trader. This is not a trading channel. I'm not financial advice. This is not financial advice. If you do trade crypto, trade at your own risk. But that's all I got, guys. Like I said, I'm not like down in the dumps. I'm just saying, like, if you're gonna start setting low buy orders, man. If they hit, cool. If not, no big deal. But let's get you guys on to the news. Get this 100 video over, and you guys go enjoy your day. Vitalik Buterin warns against overloading Ethereum consensus layer. Buterin has advocated preserving Ethereum's consensus minimalism and not overloading validators with other things. Ethereum co-founder Vitalik Buterin has published a lengthy blog post warning of the dangers of stretching Ethereum's consensus past its core functions of validating blocks and securing the network. Ethereum consensus is the process whereby blocks are validated by the proof of stake mechanism implemented in September 2022 with the merge. In a May 21st blog spot titled "Don't Overload Ethereum's Consensus," Buterin warned that using Ethereum's network consensus for other things could bring high systemic risk to the ecosystem and should be discouraged and resisted. The Ethereum co-founder was essentially promoting the preservation of the blockchain's minimalism. Buterin noted that over the years, a number of protocols or ideas have floated around that suggested using Ethereum's social consensus for other purposes, such as price and data oracles, restaking initiatives, and using Layer 1 soft forks to recover Layer 2 projects should they have issues. Quote unquote, there's a natural urge to try to extend blockchain's core with more and more functionality because the blockchain's core has the largest economic weight and the largest community watching it, but each such extension makes the core itself more fragile. Buterin said that a certain subset of these techniques could bring high systemic risks to the ecosystem, such as bugs and intentional 51% attacks. Some high-risk examples include creating ETH USD price oracles in which ETH holders or validators can be bribed to vote on which may result it can be bribed to vote on, which may result in a fork out the bad participants' money if there is a disagreement. Fork out the bad participants' money. However, he acknowledged a need for better oracles, proposing a case-by-case approach because various problems are inherently so different from each other. Overall, Buterin said that at any expansion of the duties of Ethereum's consensus increases the costs, complexities, and risks of running a validator. Application layer projects taking action that risk increasing the scope of blockchain consensus to anything other than verifying the core Ethereum protocol rules should be treated with caution, he said, summarizing, quote unquote, we should instead preserve the chain's minimalism, support uses of restaking that do not look like slippery slopes to extending the role of Ethereum consensus, and help developers find alternate strategies to achieve their security goals. The Ethereum consensus mechanism switched from proof of work to proof of stake in September of last year. Additionally, staked Ethereum has only just been released for withdrawal with the Shapella upgrade on April 12th. This explains the increased scrutiny of validator roles and security risks on the world's largest smart contract network. Let me know what you guys think in comments down below. Biden won't accept debt deal protecting crypto traders. United States President Joe Biden has expressed opposition to a debt ceiling deal that he says would benefit wealthy tax cheats and crypto traders. So, we as crypto traders are lumped into wealthy people and tax cheats. Fucking sweet. While putting food assistance programs at risk. United States President Joe Biden expressed opposition to a debt ceiling agreement with Republican leaders that would allegedly benefit crypto traders attending the group of the G7 summit in Hiroshima, Japan on May 21st. Biden called the Republicans' proposed terms unacceptable during a press conference. I'm not going to agree to a deal that protects wealthy tax cheats and crypto traders while putting food assistance at risk for nearly 1 million Americans. The alleged protection for crypto traders refers to tax loss harvesting. According to Washington Post, there's an ongoing discussion between the White House and Republican leaders about blocking the mechanism for cryptocurrency transactions. Crypto tax loss harvesting is a strategy that investors use to reduce their overall tax liabilities. It involves selling a cryptocurrency at a loss to offset capital gains from crypto profit. Oh, got it. This is just because he wants more tax money. Sweet. To claim a loss, the asset must be sold and the proceeds must be used to purchase a similar asset within 30 days before or after the sale. The mechanism is also available for stocks and other assets. Agreed. Guys, people have been doing this in stocks for years. This is a tax code. It is what it is. This is nothing new. And I find it funny that he points this finger directly just at crypto traders. Oh, by the way, no retail trader is doing this. This is large, giant corporations, funds, etc., whales. Not us. But they're going to blame us for it. Got it. All right, moving on. Along with extending tax loss harvesting for crypto, the White House pitched Republicans a similar proposal that bars investors from deferring taxes on real estate swaps. This is absolutely insane. Both the exchange would add about $40 billion in tax revenue for the U.S. government. See, okay, this is all they care about. It's just about money for them. So I'm assuming what they're referring to here, guys, is the 1031 exchange. If you know anything about real estate investing, this is what you can do. If you've held an asset for quite some time and you've had significant gains on that piece of property, you can sell that property and roll those gains into another property. And there's all sorts of strings attached. It's not as simple as it sounds, but it's called a 1031 exchange. And the rumors are that Biden has been trying to get rid of this for quite some time, because they want more tax dollars. That's all it is. This was used as an incentive to help boost our economy, boost the real estate market, etc. And it's a beautiful, for people who want to invest and don't want to be a slave to the system, it's a beautiful benefit. That, for example, let's say I own, let's just say 10 duplexes. And after 5 years, I've got equity in those 10 duplexes. So I decide to liquidate my portfolio. And then I take said portfolio and I roll it into, let's say, a 100-unit apartment complex. I can do that tax-free if the deal's set correctly and done in the right amount of time. That way, and again, I'm never collecting any cash. I'm just continuing to collect my income from those rental properties. But the point is you don't care about cash. You're just trying to create your income. You're cash flowing. You're creating an income stream for yourself. So it's not about the cash lump sum. Well, the government's so obsessed with coming after you for tax money. For what? So they can spend billions of it and send it to other countries, or waste it on programs that aren't doing anything, or whatever. But they're going to get rid of this stuff. So you can basically no longer create generational wealth, is what this for you and your family, and get out of the fucking race. It's insane. Sorry, there's my rant. Moving on. Republicans reject the proposal. A source told the Post. House Speaker Kevin McCarthy claims the U.S. debt rise is a spending problem. Absolutely not a revenue problem. Absolutely. citing the Biden administration's excessive spending during the pandemic. Meanwhile, the White House blames the debt issue on tax cuts from previous administrations, claiming revenue has been significantly affected by tax reductions. Yet none of you fucking asshats have taken a pay cut. Weird. Sorry, I sound really upset about this stuff, but these guys just lie to you. Like, all politics are nasty. All of it. They're all fucking disgusting. But these people that want to blame it on, oh, we did all these tax cuts, so now we don't have enough money. Fuck you. Y'all are still rich. Okay, Republicans want to close the deficit with $4.8 trillion in spending cuts, which would directly affect federal agency budgets. Weird. There's your problem. Their federal agency budgets will get cut. Oh, we can't do that. We need to raise taxes. If Congress fails to raise the debt ceiling, the U.S. could default as early as June 1st. Biden will reportedly speak with McCarthy on the phone during his flight from Hiroshima to Washington, D.C. In effect, since 1917, the debt ceiling is the limit that Congress has to set on how much money the federal government can borrow to pay I-bills. Is this supposed to be its bills? Guys, do some damn proofreading, for fuck's sake. Yeah. This is what they want to do to you guys. It's not about, oh, we've done such a terrible job of managing your tax money already. We're going to start getting rid of tax benefits so we can get more tax money from you to continue using your money terribly and basically keep you a slave for your entire life to us, to pay us political gods, pay us our money that you earned, by the way. Oh, also, if you are trading crypto or tax or regular stocks at all, if you're an investor at all, never forget this. You assume all the risk. And if you win, they're the first ones there with their hands out. But if you lose, they ain't there to back you up. But you assume all the risk. Never forget that. All right, last but not least, guys, and I'll get you out of here. Ripple versus the SEC. Could newly released documents tip the balance? I hope so. I don't know about y'all, but if you aren't as over this shit as I am, where have you been? This is so dumb. Like, the fact that this is still going on is absolutely asinine. The fact that this is still going on should prove to you how absolutely terrible at their jobs the SEC is. All right. I'm fired up today, I guess. The court case between SEC and Ripple Labs has been ongoing for nearly 2.5 years, but a summary judgment ruling could be made any day. Don't tease me. The ongoing case of Securities and Exchange Commission versus Ripple Labs could have a significant impact on the future cryptocurrency regulations. Absolutely. Ripple first popped up in 2012 with the promise of providing financial institutions and other entities with faster, more affordable clearance of cross-border fund transfers. To that end, Ripple created XRP Ledger and a cryptocurrency called XRP to function as its native coin and facilitate transactions. On December 22nd of 2020, the SEC sued Ripple, alleging that the firm selling XRP represented an unregistered security offering. The Ripple co-founder and former CEO Chris Larson and current CEO Brad Garlinghouse were also named in the SEC's charges. Most entities on the receiving end of SEC enforcement action choose to settle. In this case, however, Ripple chose to fight the charges at great expense and take the matter to court. Ripple argued that XRP does not satisfy the Howey test. Excuse me. Try not to sneeze, guys. The Howey test, which is used to determine whether an investment contract exists and therefore whether a transaction is a security transaction. It also said that if XRP was in fact a security, the SEC had failed to give it fair notice under the U.S. securities laws. Enter the Hinman documents. The Hinman documents refer to a 2018 speech given by former SEC Director William Hinman and documents associated with writing it. In the speech, Hinman said that ETH should not be considered a security given its decentralized nature, stating, putting aside the fundraising and accompanied Putting aside the fundraising that accompanied the creation of ETH, based on my understanding of the present state of ETH, the Ethereum network, and its decentralized structure. Current offers and sales of ETH are not securities transactions. This is considered a landmark speech and it signaled to the crypto industry that it could be possible for cryptocurrencies to transition from securities when they are first created to commodities once they are sufficiently decentralized. This could have an impact on Ripple's fair notice defense, which comes into play if Judge Annalise Torres finds that Ripple did indeed sell unregistered securities. More stuff from Deaton explaining this, I'm assuming. If you're not following Deaton, but you are interested in the XRP case, what are you doing with your life? John is definitely a large asset of information in that. Ripple requested the documents in discovery, and the request was granted on October 21st, 2022. While the documents could be used as a part of Ripple's defense, the SEC has attempted to keep them sealed on multiple occasions, arguing that they are irrelevant to the court's summary judgment decision. But on May 16th, Judge Torres ruled that the Hinman documents are judicial documents subject to a strong presumption of public access and denied the SEC's motion to seal. Brad Garland has another win for transparency and predicted Hinman emails to be publicly available soon. I think I read this to you guys last week. Stay tuned as the lawyers walk through the mechanics to make that happen. Notably, the court did not state whether the documents would be relied upon when it decides on the summary judgment motion of each party. But given the statements of those who have seen the documents, it appears likely that they will negatively affect the public image of the SEC. Surprise, surprise. Additionally, there are questions about whether Hinman had a conflict of interest when making the speech, as he worked at a law firm that is a member of an Ethereum advocacy organization before and after working for the SEC. And the documents may provide additional details around this. That doesn't matter, though, and I'll tell you why. Because doesn't matter if he had bias. It doesn't matter because he was the lead of the SEC, and so what he says would be the law of what everybody would be working around to do. So basically XRP went about their business based on what this guy was telling them. So it doesn't matter. It absolutely doesn't matter. Speaking during a Twitter space shortly after ruling, lawyer and crypto law founder John Deaton predicted documents will be disturbing, but not as shocking as many people think it's going to be, because there's been, quite frankly, such a big buildup for it. I believe when these emails come out that the conflicts of interest will be even more highlighted. What does the latest ruling mean for the case? While it's still too early to tell what the ultimate outcome of the case will be, the court also denied certain motions to seal from Ripple, which include references linking Ripple's revenue with XRP sales and the amount of compensation offered to trading platforms, among others. In a Twitter space, Deaton highlighted these sections of evidence likely to hurt Ripple's chances of a complete victory, adding, "I think the chances of Ripple getting a complete victory are much slimmer after reading this than I felt before. I still don't think the SEC is getting a complete victory either." Deaton theorized that the courts would decide to fine Ripple for its early sale of XRP relating to the initial coin offering and other transactions aimed at boosting the network, but the secondary sale of XRP and the coin itself are not securities. And they've already established this in the library case, which is interesting that we're even here right now. Deaton's thoughts on the subject were given further credibility when former SEC security lawyer Mark Fagel, I don't know, Fagile added his voice to the Twitter space, saying that he generally agreed with everything that had been said, that the SEC suit was worded in a way that focused on the tokens issued by Ripple and not secondary market transactions. Fagile added that he thought Torres would be overstepping to make a ruling on secondary sales, but he believed they were helpful in the SEC's case, as they illustrate how a secondary market would not have been created without Ripple issuing securities while promoting the network. Could the case finally be reaching its conclusion? In a May 17th Twitter thread, prominent pro-crypto lawyer Fred Rispoli suggested that the summary judgment ruling is already written and could be issued any day now, while also agreeing that a split decision was the most likely. Deaton noted during the Twitter space that he believes Judge Torres knows how she will rule, but added that guessing how much is written in it. Let me start that over, guys. I'm like getting blurry-eyed while reading this. This is a kind of a long article. Deaton noted during the Twitter space that he believes Judge Torres knows how she will rule, but added that guessing how much is written in its final form would be pure speculation. He also agreed that the decision could come down at any time, but he added that it could take another month or longer. We are close, guys. We are very close. I think the big thing for this is if you don't have a bag of Ripple or XRP, I should say, now might be a time to do it. If and when this thing gets listed back on exchanges, especially United States exchanges, it's going to pump hard. Do I think there'll be a correction after that? I absolutely do. But yeah, I think it's going to pump real hard. Oh, but guys, let's look at the market one last time. Bitcoin one last time before we get out of here. That's all I got for you today for this 100th video of Boring Crypto IO. Yeah, Bitcoin, boring as per usual. Guys, that's it. That's all I got for you today. I ranted, I yelled, I stumbled over my words per usual. But as always, guys, if you do enjoy the content I provide here for you every morning, Monday through Friday on Boring Crypto IO, please by all means subscribe. It helps. Turn on the bell for notification so you know when I do post a video. It helps. And watch the videos. If you like the videos, like them. And to help spread awareness of the channel, please share these videos or this channel on all of your social platforms, guys. And I will see you bright and early tomorrow morning. I am out of here.